Good morning from Los Angeles. Welcome to Power Hour with Sergio every Friday, 10 a.m. Pacific, 1 p.m. Eastern. How's everyone doing after yesterday's bloodbath? Um, yeah, that's what the markets do, man. The markets are just, on the indexes anyway, they're in a kind of a standstill. I talked about that this week. I don't think indexes are going anywhere. If the Mag 10 doesn't go, indexes are not going anywhere for the fact that S&P 500 is a market cap weighted index and top 10 stocks make up about 80% plus of the index. So if they don't go, indexes are not going anywhere. But uh, in the popular stocks, let's say, right? Big moves, 30, 40, 50, 60% moves. And if you're on the wrong side, it's going to be bloody. And it was bloody yesterday. Hopefully, you all survived. And I don't think today's bounce is important. So, in bull markets, there are phases of the week that one must recognize. The phases of the week are Monday, Tuesday we're strong, Wednesday kind of flat, Thursday strong, Friday a little bit of profit taking, and on kind of rolling over. I'm not going to call it the bear market, obviously, but on grinding lower, flat markets, especially after a sell-off, the cycle or the rhythm of the market is Monday sell-off, Tuesday flat, Wednesday a little bit more sell-off, Thursday flat or sell-off, and Friday short covering. So the other thing that I'm also noticing is that the shorts have piled on. Short positions have been. This is the highest short position. Short position is something you can follow, by the way. You can Google it. And overall short position, especially by hedge funds, they're pressing. What are they pressing? They're actually rotating quite heavily. They're buying all the consumer cyclicals, like look at Coca-Cola, for example. Look at Walmart, right? Look at J&J. They're buying those stocks and selling, definitely have been selling and pressing, shorting the software stocks, big names like Adobe and ServiceNow and Duolingo and CRM, right? And so you just got to look at the charts and you just got to figure out what's going on. And the charts, of course, don't tell you what's going to happen in the future, but it gives you a good indication of what has been going on. So, yeah, there's definitely rotation going on. How do you catch the rotation? I said that before. Create some scanners for yourself. Whatever's making 52, like yesterday, for example, on a massive sell-off, you had at least 170, 80 stocks with my filters that are hitting 52-week high list. So, and then today, if you look at it, market bounces, they take off. So they go down a little bit when the market's selling off, and then they take off when the market turns around. This rotation is normal. It's going to happen, but the indexes are just kind of stuck. If you look at the SPX has been the same price as it was 4 months ago, maybe, right? And a lot of stocks in the Mag 10 are the same thing. If you look at Apple, and with the exception of Microsoft, Tesla, and Nvidia, and all these stocks are pretty much what the same price as they were 6 months ago. Of course, there are some other ones that are just, getting taken out in the back of the shed and shot, like Robinhood, and Schwab is looking actually interesting to me, so I may sell some put credit spreads there. It seems like AI actually is hurting, or by Wall Street it's being looked at as software replacement. And yesterday, last couple of days, there was news that some AI agents could replace brokerage advisory services, wealth management services, and Robinhood is doing stuff, with that as we speak. And but Robinhood is, it's in its own world of hurt for the fact that they somehow coupled Robinhood with crypto. You know, that's the proxy supposedly, and I'm not sure if it is. But then if you looked at Robinhood's earnings, yeah, the only part of their report that was negative was crypto trading. And look at Coinbase, right? I mean, that stock was what, 300, got cut in half. That's because crypto is going down. But I mean, crypto after that big sell-off a couple of Thursdays ago, it's just trying to find some sort of a floor. I'm not going to call it a bottom. It's impossible to call a bottom. It's premature, I'm pretty sure. But yeah, it's interesting what's going on. Position-wise, I reduced a bunch of positions, cut exposure. A couple of them are working fine. But I'd rather keep my powder dry and then have a trend established and go with that as opposed to anything else. But if you're just in the indexes and the Mag 10, you're basically treading water. And it's going to be interesting. It's going to be interesting. So what else is going on? I don't know. I think there is something going on with X, because I don't think I'm able to go live on X for some reason, although I'm selecting it. But I don't know what's going on. Not that it matters really, because X is something that I talked about. You shouldn't be paying any attention to anyone on X because they only talk about their wins and gains, and when the market turns over or sells off, you know, they complain about their report being down 50% while the market's down 2% from all-time highs. That's what's going to happen if you're dealing with these. And there's another shift that I'm seeing that's happening. It's been going on for about at least a month now. Every single growth stock with high PEs is absolutely getting hammered. Definitely, there's an adjustment going on in the PEs. Some of them don't even have PEs. I mean, some are like price to sales. And when you're, you know, pricing a stock according to their sales, which is something new. I mean, that came around about a decade ago, price to sales. I'm like, okay, fine. But yeah, they're definitely getting repricing going on there. A lot of stocks are down a ton. I mean, again, 50, 60, 70%, while the market, when I say the market, the index is only 2-3% from all-time highs. As far as the indexes, smaller caps are outperforming large caps first time for the last 2-3 months now, which is IWM. Let's say IWM would be Russell 2000 compared to SPX, and Triple Q is doing actually better. But again, it's not enough for the S&P 500 to go up, because again, as I said, it's a cap. Especially if you look at a S&P 500 and then you say, okay, well, market's not going up. Actually, under the surface, 10 stocks that ruled the S&P 500 are not going up, that have been going up for the last 3 years. That's why the S&P 500 did what it did. And we all know which 10 those are. Small caps, mid caps. I mean, these are not small companies, by the way, right? So, you know, multi-billion-dollar market cap companies that are actually going up, but it's not enough for the S&P 500 to go, let's say, above a 7,000, because, you know, 10 stocks make up 80% plus of S&P 500. But then there's 490 stocks that have been underperforming. Now they're outperforming, and then the Mag 10 is underperforming. So once you understand this undercurrent that's going on, I think you'll be fine. Important thing is, again and again and again, important thing is position size. A lot of people oversize, and, you know, like, I mean, if you oversized on Robinhood and stock got cut in half, literally 155 to 70, you're going to be in a world of hurt. I don't care what strategy you do, unless you're short. And there are ways to short, by the way. But then I think, I don't know, maybe 10% of traders short stocks anyway. You know, I know future traders short quite a bit, but you must learn how to short. You have to add that tool to your toolbox. You don't have to do it, but you at least have to understand the mechanics of it so you can take advantage of some of these massive moves. So good morning. Power hour, 10 a.m. Pacific, 1 p.m. Eastern. Yeah, I'm for sure something's going on, but X, I don't think I'm broadcasting on X. If anybody's on X, if you guys go and follow me and see if I'm broadcasting there, I don't think I am. So good morning, Mike. Good morning, Doug. Good morning. Doug asks, have you heard about Cloud Legal Module? Yeah, there are a lot of agentic AI, like small agents, parts of certain areas. Yeah, I mean that's the reason, you know, the market has been seeing this for the last, I don't know, like look at the charts I mentioned, right? 4 symbols just to go, or actually 5. Where one I was long in my long-term port, I sold it with a double, luckily, which is Unity Software. Look at that chart, right? Look at Adobe, massive company. Look at Figma. Look at CRM, right? Look at ServiceNow, NOW. Look at a lot of these software stocks, legacy software companies. They're just getting hammered. So if anybody wants to join, not that you guys do, let's put the link up there. Yeah, it's definitely something wrong. I'm looking at the head count and just can't be this low. But, well, maybe people are losing interest in the markets. I don't know. So what else is going on? Oh, you guys can't see this. Let me switch it to what you guys can see. Here you guys can see that. I'll post my positions on the community page of the YouTube channel. Please go check it out. I don't have too many positions, maybe like 5 or 6 that mean something. Actually, 3 that mean something. The rest are just hold pattern, to be perfectly honest. Still in BMNU. I think I'm going to sell some more of these. Yeah, I had a position on Dollar Tree, and then BMO Capital lowered the, went to an underperform from neutral, and then they raised Dollar General, same business, but then, these analysts are these analysts. But we'll see what the stock does. But I had some calls expiring next week, and taking a hit there. Let's see if we can take whatever shekels we have left. Yeah, we did that. So we got 30 left. Let's sell the rest of it. It was Monday, by the way, the markets are closed, so you guys know. And sell the rest of it. Let's see. Actually, we'll keep 10. We'll sell 20 more at 25 cents. So for my members group, as you guys can see, I'll post it after the live. I'm taking the L on the LTR. We'll play for another day. Okay, we'll put that in. Okay, that's about it. That's all we can do, actually. Okay. So he's taking them at 20, but he's not taking them at 25. Okay, fine. Well, I have lemonade. I opened the put credit spread expiring next week. Earnings are on Thursday, so this position will be closed, or I will sell call credit spreads to make this an iron condor. BMNU calls are going to expire worthless. I'm short the 3 calls. I had sold them. Those are going to expire worthless. Lower the cost basis some more. I am short put credit spreads on Ondas and long calls. I had 30. Actually, that saved me yesterday. I had 30 put debit spreads on SPY, 680, 670s. Cost was like about 210. I sold 5 more. I'm down to 5 at 325 this morning on the pullback, and it's like a 50%, which is not bad. The rest was sold yesterday between 275 and 305. And the ZSL, which is the inverse ETF of, I still have it. I have 5 days left. I had a covered strangle, long 2,500 shares, short the 2 puts and short the 3 calls. Took in 95 cents for a $2 stock. That's ridiculous, but they gave it to me, and then I did it. I actually did it simultaneously. I didn't leg into this one. And if it's between 2 and 3, if it's above 2, stock is going to, if it's above 2, puts are going to expire worthless, calls are going to expire worthless if it's between 2 and 3. If it's above 3, if silver sells off, let's say, then I get called away at 3, and that's 3 plus 94 cents that I took in. That's 394. Or if it's below 2, I'll get assigned another 2,500 shares, which I'll gladly take at 105. I mean, I think that's probably the best position I put on in February, or actually late January. So lemonade, I probably am looking. I mean, at 50%. Hopefully, we'll cover the 50%. I did those yesterday at 235 credit. Let's see, 470, 245. What's that? 225 credit. These are next week's expiration, next Friday expiration, 60-55 put credit spread. And yeah, I mean, I'm happy with that at the moment. I may close. I'm not sure if I want to hang around for the earnings for that one. And yeah, I'm gonna put these at 20 more, and I'll keep 10. Let's see what happens. Okay. Yeah, X is definitely having problems. I don't think I'm broadcasting on X. It's fine, whatever. And so what other things I'm looking at? I'm looking at, let's go through some charts. Let's go through the Max 7 especially and just see why the market's not going anywhere. When I say the market, the index, obviously. This is Dollar Tree. Okay. All right, so let's look at SPY. Nothing doing. We got to see this sideways action. Actually, SPY is the same price as it was in mid-October, believe it or not. Literally, actually, yeah, exactly. And a lot of the Mag 10 are mirroring that. So if you look at Apple, right? So Apple pulling back. Actually, I may put a PDS on that. Apple is same price as exactly in mid-September. So just looking at the NVIDIA. Actually, that's more. That's going back to August now. NVIDIA is the exact same price as it was in August. Well, if these stocks are not going anywhere, Amazon actually is lower than what actually Amazon is back to where it was last April, almost, coming out of the Liberation Day sell-off. So if you guys look at all these charts, that's why looking at charts is important. Not drawing too many chopsticks, but Microsoft is its own world of hurt. Microsoft is actually back to where it was also mid-April of last year. So, if these stocks don't go, Triple Q is not going anywhere. So if you look at Triple Q, which is where these stocks are, but mostly in SPY, because it's a market cap weighted index, same thing. It's just going sideways. Now, some may call this a top. I don't know yet if it's a top, but I wouldn't hesitate to buy puts if we start rolling over. Because a lot of these stocks are under their 200-day EMAs, such as Microsoft, such as Amazon. Google, in fact, started joining the sell-off. I'm long Google in my long-term port. Google is the only one that's a lot higher than what it was last April. Tesla, same thing, same price as last September. So, and on Tesla, actually, it's the same price as 4 years ago. And some of the people say, well, you're crazy. How could that be? I'm like, well, I'll show you guys how it could be. There's Tesla at 410. Tesla was October of 2022. Same price. So what is that? Almost 4 years, 3.5 years. So, yeah, I mean, if these stocks don't go, the Triple Q or SPY is not going to go anywhere. And but then if you look at IWM, you see the rotation. Look at the difference, right? This is Russell 2000, and Russell 2000 is almost making an all-time high, but compared to, 4 or 5 months ago, let's say October, it's up by 6%, 5%, while the other ones are not doing anything. So smaller stocks are outperforming, and within those smaller stocks, you got to find some gems. It's not that hard to do. And going with the popular stocks now, for example, Palantir, definitely in a downtrend. All rallies must be sold until proven otherwise. Under 200 EMA, so that stock is down from 200 down to 130. That's 70 points. And it's, what is that? 35%. Robinhood, definite downtrend. 154 to 70. That's over 50%, 55%. These are the popular stocks, right? That all the ex-Fours talk about. SoFi down under 20 now from 32. That's about 40%. And as if there is no other financial stocks. Like, for example, look at Goldman Sachs versus SoFi. Not truly comparable, but that's been selling off as well last couple of days due to the AI taking over, supposedly. JP Morgan. That bounced off 200 EMA. Schwab is kind of interesting to me here, right at 200 EMA, actually. Where is the 200 SMA on that? Yeah, just about the same place. That stock doesn't really take out 200 EMA that often. Huge volume. Earnings were good. $1.35 estimate. I mean, here's the stock, right? That's going to earn about $4.50, $5, close to $5 in 2026. And reasonably priced, 17, 18 PE, right? And then there's the other ones that are not reasonably priced. They're just completely overpriced, like Robinhood, let's say, right? So why should Robinhood, even after the 50% sell-off at 75, is overpriced, fundamentally anyway. Well, PE world. At 155, it was ridiculously overpriced. So they're going to earn $2 this year if everything goes well. 37.5 P versus Schwab 17 P, and Schwab is still growing about 10%, and Robinhood is growing 15%. Why would you go buy Robinhood versus Schwab? I mean, yeah, growth is there, higher growth, but then growth at any price doesn't work. Well, it kind of got proven. So actually, let me see where the put credit spreads are on Schwab for next week. February 20th, 95, 92.5. That's not bad, actually. Almost $1. Actually, I think I can get those off at $1. And it's very equity efficient, obviously. Let me try 5 of them at $1. My rule of thumb is take 50% of the wing. The spreads are pretty wide, so maybe I'll go for like $1.05, and then I'll add. No go. They didn't do it. Yeah, spreads are pretty wide. 177, 204, 89, 106. I can leg this in probably and get it done. I can buy the 92.5 at $1. Can I sell? No, I can't sell them at 2. That's why they're not doing it. We'll see. We shall see. I'm going to do it $1 plus. Still, stock is red. When the market turns, it may sell off a little bit more. But 200 EMA is pretty strong on Schwab. Going back 3 years, yeah. I mean, it does violate a couple times on massive sell-offs, but Maybe we'll wait for that. Actually, not really. Yeah. Let's look at the weekly. Yeah, on the weekly, it's about 50 MA is about 92. Yeah, I'll be more interested down there. The stock does have sell-offs, but that's when the market's really tanking. So we'll see. No rush. My world is a world of no rush. No need to rush. No need to rush anything. Still have 5 PCSs left. Cost base is 190. They're like 260, 270. I'm not going to take it. Just leave it there. I'll add to it, actually. I don't think this rally is real. So let's talk a little bit about crypto. As we know, last week, Bitcoin bottom, well, short-term bottom at, let's look at, so what's happening is that you guys can see rotation, right? Look at Walmart acting like a tech stock, 52-week high. Look at Coca-Cola acting like a tech stock. Look at J&J, right? Look at these stocks versus, I mentioned the software stocks. Look at Adobe. Look at that. Look at that downtrend, right? Look at ServiceNow. Gosh, you don't want to be caught in any of these things, right? Look at CRM, Salesforce. Look at that. I mean, they're bouncing a little bit, but every bounce has been sold or shorted in these stocks. And this is just a 1 year. If you look at the 3 year, they've been in the bear market of their own for a while now. So CRM topped at 370. We're down to 170. Adobe is same thing, like 60-70% lower. Adobe, oh my God, look at that. That topped actually way back in December 2024 at 638. We're down to 251. That's down 70%. ServiceNow, look at that. I mean, you don't want to be caught with one of those folks. 240 down to 108. That's 60-70%. I'm not going to talk about PayPal. I don't know if that's a software stock or not, but I mean, that's just, it's in its own world of hurt. You all know what's going on with HIMS, right? And Novo Nordisk. Just to take a look at it. Stocks 70 to 16. I mean, you're just going to get smashed. And here's Hood in its own world of, bear market. There's no ifs and buts about it. Where will it end? We don't know. But there's 10,000 other stocks. You don't have to be in Hood. Over long term, will it do well? Potentially, possibly. But if crypto keeps selling off, I'm not sure. So let's look at a little bit of crypto. IBIT is the iShares ETF, the largest ETF. We kind of retested the low. MACD turned from zero. I mean, it's just in a world of hurt. It's just in a downtrend. There's no ifs and buts about it. And when it's in this kind of downtrend, you just got to be patient and wait until it creates a base like this, maybe. Because this definitely was not a base. I thought it was a base, and then we just a point above, but then we just got stuck at 200 EMA. This far under 200 EMA, it may give me a little hope of a bounce, maybe to 70, 75,000, but I think that's going to be it. Same thing with Ethereum. This is the Ethereum 2X ETF. iShares ETF. It's deadly. I mean, these sell-offs are deadly. So a lot of you maybe understand or don't. I don't know what indicators you guys use. None of the indicators that you guys use are, they're all trend following, obviously. So when MACD goes under zero, folks, you got to be really, really careful with these things. And MACD did go under zero just about 4,000 on Ethereum. And look where we are, right? 1,900. So, and consequently, BMNR, everybody's love, goes from, 70 to 15 or 18. And that's what's going to happen. And conversely, BMNU, which is the 2x ETF of BMNR, going from 42 to 2. So buyer beware. There may be a short-term bounce here, it looks like, and Solana doing worse, actually, the worst actually out of all the cryptos. This is Solana ETF, iShares ETF. Yeah, it's just bloody. Actually, Solana has gone down the most, 260 to 70. It's 70%, right? And the 2x ETF of Solana is SOLT. God help you guys if you're into this thing. But all these things go to zero ultimately. These are not to be bought and held for long periods of time because of volatility drag or slippage, as they call it, because they don't own the underlying. That thing went from 35 to 3. So, you know, if you don't understand any of this, please don't be involved in the markets. This is the basics. This is markets 101, folks. This is not even complicated stuff. So I'm like, okay, well, you know, whatever people do. And as far as what I'm watching, you know, I'm just watching 52-week high list. Let's see. What's on that list? Aluminum stocks are getting a little bit of a haircut. I changed my software for some reason. So let's go to that list. There's 165 names on that list as of today. And then over the weekend, I'll adjust it, take out some, put some new ones in just so you can catch the rotation. So AA, Trump is supposed to lift some of the tariffs for aluminum, supposedly. And that's why they're taking a little bit of a hit. But I do like aluminum stocks. I do like industrial metals and basic metals. And copper and aluminum obviously are the two. But before we do that, let's look at gold. You know, massive sell-off, right? And then it's kind of hanging in there or basing. I think golds need to go sideways for a long time here, at least another month or so. This is silver, same thing. A little weaker than gold, but I think it's found the leg, but, you know, pretty wide trading range. I think it's going to go between 75 and 85 an ounce. This is SLV. This is iShares Silver ETF. But that sell-off was spectacular. I mean, 110 down to 65 in like 5 days. And so Century Aluminum is getting more of a haircut than AA. It's on the 50 EMA, actually. I may sell some put credit spreads there. Although MACD's just kind of put out a very nasty bearish divergence, although above zero. Earnings are coming out on that. Let's see what the earnings look like on these things. Nothing special, really. You have to understand where these stocks have come from, right? So be careful, folks. Be careful. As far as some of the names on the 52-week high list, I actually am looking to do something with Avago. Earnings are coming out. You know, had a nice move up. Earnings are not due for a while, but Avago has been killing it, right? I mean, it's supposed to earn about $8.50 this year. $3.30, $8.50, still about 40, right? 40 PE, but much better than before. So earnings are growing, earnings are coming, but yeah, I mean, it bounced off the 200 EMA. I think selling puts would be okay on this. Selling, not puts. I would not sell naked puts on these things. And just to define risk downside trades. If you're going to take less money, but sleep at night, as opposed to imagine if you had sold puts on Hood or, you know, HIMS and PayPal and all that good stuff. So one other stock I wanted to actually look at is, now that the earnings are out of the way, First Solar. Yeah, that's kind of okay. And the other one, actually, that was down quite a bit yesterday. Let me take a look at that. And phase. Oh, it's ENPH, folks. Yeah, I think that's worth a look. One above 200 EMA, earnings were good. May have bottomed actually. You know, you're gonna say, Sergio, why didn't you do it at 25? I know, I don't want to do it at 25. Because that thing has been in its own world of bear market. If you look at end phase, gosh, look at that thing, 230 to 25. What a disaster. Now with limited downside, maybe we can put on at about 40. Yeah, I think it's worth a shot here. Earnings were, that's the gap up day, went up to 53. Oh, massive beat on earnings. Wow, 21 expected, 71. Whoa, that's massive. Although the last quarter was the opposite. Yeah. Every earnings, maybe is this the change now? Let's look at a credit spread there. I'm not bored. You know, I just do things when they get to where they need. There's a weeklies. Let's take a look at the weeklies. Stock is 43.80. $45, 42.5. We can do it over a buck. I'm pretty sure. And we're in the money already, though. What's the point of that? Let's see if we can go to March on this, or a week after. 27th, 42.5, 40s. Pretty liquid too. 42.5, 40, 84 cents. Not good enough. Let's see if we can squeeze another couple of weeks out of this. Go to March expiration. Marches don't have. Yeah, Marches don't have 45 40s. 233. That's about fair. Let's see. I do like it here, actually, after that pullback, after the earnings. Volume is kind of anemic. MACD is good. It's as high as 53. Let's see. Maybe we could do like a four-legged one on that. We can take a little directional bet on that. Sell 45s, buy 40s. Always on the downside, protect your ass, folks. And then buy the 45 calls and sell the 55 calls for a credit, nonetheless. I like this trade. I think we'll do that. And then we'll add to it if it goes a little bit lower. Why wouldn't I do that? How much is it going to cost me? Pretty good, 2,500 for 5 lots. It's about 500 bucks. It's like almost like a stock replacement, right? It's kind of a synthetic. I do like this trade quite a bit, actually. Huh. Okay. Yeah, on the daily, if we get down to 41, that would be a better trade, of course. Actually, we'll first pull back to 20 EMA. 41.94, 42. Yeah, I think I'm going to put 5 on. And if it keeps selling off, we'll just take it on. This is a limited risk downside trade. First time in a long time we broke above 200 EMA. If I wait until the 50 crosses the 200, it's going to be too late. By then it'll be like 60. Yeah, I do like this trade quite a bit. Especially if we can do it with a credit. How wide are the spreads? Or we can do more credit. We can do 45 by the 40s. Or we can go shorter term. Why do we have to go long term? If this is going to work out, it's going to work out, especially if I can do it with credits. Let's go to March 6th. Okay. We're going to stock is 43.79, so instead of 45s, buy the 40s, buy the 45s, and sell the 50s. $0.80 credit. Better yet, should I give myself more time? If I go to March, do the same thing, buy the 45s, sell the 50s. I want to give myself more upside though. 73 cents credit, and 74, 75 cents. I can do this at a credit. Okay. Let's do 5 and 75 cents. Let's see if we get it off. Well, hopefully we will. Nope. Okay, we'll just wait. Put the order in. All right. That's live trading for you guys. End phase. Four-legged. Just get 75 off. We'll put another 5 at $1 credit. If we get a sell-off. So you must understand the downside on this, right? So you're selling a put credit spread with that money buying a call debit spread. Kind of turbocharging it. Play for the upside. So stock goes to 50, you have a 45.50 call debit spread that's going to pay off handsomely. That's 5x. But then the downside is I'm taking in $1, let's say. Well, my put credit spread is 45.40. Max loss is 5. So I can lose 4, but I can make 5. Not really that great of a... Yeah, not really that great of a risk reward here. Well, we'll see. What else can we do? Can we do 40.35 put credit spread, which is a lot safer? Let's try that one. 40.35. We're taking in $1.12. We're buying the 45s, selling the 50s. That's at a debit. We don't want to do that. We don't want to put money out of pocket, although it's less risk. Okay, we'll leave it at that, but I may change the strikes. Stock was down to 43. Interesting. Yeah, I do like this pullback. I mean, we're pulling back to where we're supposed to on really low volume. Yeah, I don't see any other way of playing this. It could pull back a little bit more. It could pull back to 42, but let's leave it at that for today. Anyway, so orders are in. 75-cent credit and $1 credit. The rest is the rest. Where is my put debit spread? If you have questions, post it. I'll just answer and then say goodbye. See you guys on Monday. That was a 265. We'll just keep that 5. We'll add to it actually at some point. Okay. Some other stocks that I'm actually looking to. This one I'm looking to short. Yeah, we hit the top of the channel here. The reason this is happening is because they own a bunch of Anthropic shares that they invested, I think like literally like nothing, 5 million, and the company's worth like 40 billion. This is SK Telecom. It's a Korean telecom company. I want to short that. And so when you're shorting these, you can do 4-legged trades on those, right? You can sell a call debit spread, call credit spread, and then buy some puts. I'll just wait a couple more days on that. This is testing the upper end. But there are some beautiful charts. I mean, look, you know, a lot of companies like ho-hum names like Southwest Airlines. You know, this pullback should be bought on that. For sure, it should be bought. And it is important to understand the power of a trend. And if you don't understand it, you're going to go to the broke house real fast. Yeah, AEO is about to turn again. CCL. These are all beautiful uptrends, folks. You know, just deal with uptrends. Don't deal with anything else. Especially if you're a premium seller. Akamai, another big move today. It's just melting up now. Okay. I don't see much in that list, honestly. Because they're all making 52-week highs. You just got to buy the pullbacks. I do like CENX, but I think 50 EMA. It tested it actually this morning, already bounced a couple of points. Wow. Deere. There's another one. Look at that. And that's John Deere, folks. Believe it or not, this is Caterpillar. Look at these stocks. Look at the complete opposite of tech stocks, right? That's where the money has been going. And when the money's going, don't argue. It ain't Robin Hood YOLO money, okay? Trust me, folks. This is massive institutional money. There's Dover Corp, all these industrials. You know, don't question it. Copper stocks, ERO. Actually, that's interesting. Actually, that's interesting. Where's Freeport? Yeah, just consolidating, but ERO is kind of interesting. Putting a key reversal in today. Yeah, we'll see how it reacts. Next week, probably a little bit more sideways before I retest the high. That's a good trade, actually. So we put in the end phase. Oh, of course, the second I look at it, it starts going higher. Well, got to be patient. Don't chase. I don't like chasing. Don't like it at all. Anyhow. Okay. Let's go to the front, answer some questions, and then go have a cup of coffee. Because I don't think X is working, X Live. Hey, traveler. Good morning, Luis. How about MBIS? Not interested in any of those power generators, but I'll take a look at it. I'm bearish on all those companies. Not interested whatsoever. How about MBIS? An overpriced nothingness. I'd rather deal with CIFR. I don't know what just happened to my screen. What is that? F? What is this? Am I being hacked? Okay, NBS. Yeah, okay, it's just bottoming here, basically. It'll either roll over and die, or it's just going to take a leg up. I'm more interested in this group. My pick is CIFR. I like that a lot more than NBIS, just because Google is involved. You know, in that group, you have IREN. I mean, just, you know, teetering on disaster of 200 EMA. You know, yeah, I'm not interested in NBIS. Okay, look at the earnings on this thing, folks. Supposed to lose 38 cents. Supposed to lose 49 cents. Estimates 40. Supposed to lose 44 cents. And how much is this company worth? How many billions? 20 billion? Not interested whatsoever. If AI is a farce, this thing was $16, by the way. So if AI is a farce, be careful. There's a reason they've sold off 50%, just about. Same thing with Oklo. Well, why am I interested in this? 193 high, stock is 66. Why am I interested in this? There's so many other good names. Well, you could have made a ton more money in Coca-Cola, for God's sakes. But I am interested in CIFR in that group. So I'll put my money there. On a pullback, hopefully. Your ADA and phase. Yeah, I'll just try to put a trade on. We'll see if it works. This pullback is decent, right? After the earnings. Low pullback. I don't know about any of those plans or this and that. I'm just trading. I'm looking for it to bounce from 44 to 55. 10 points is good enough. Yeah. SKM is moving because they invested in Anthropic when it was valued at 500 million. They invested like 5 million. That 5 million is worth how many billion now? Because Anthropic just did another round. I think at some ridiculous 40 billion valuation or something. You guys can Google that. I don't know the exact numbers, but that's why it's doing it. Be careful with those. Anyway, so one last look, and then we'll say goodbye. Yeah, I gotta fix this X thing. I don't know what's going on with X. Something is up with X for sure. Because I'm not even seeing my own live stream on X. In fact, I'm gonna go take a look at it now. Yeah, I'm not seeing it. Something is up with X. Yeah, I'm not even seeing it. Should be live on X now. It was happening all the way until 4 days ago. Something happened, and then I'm just not seeing it now. Not that it matters. I'm not a fan of the X crowd, and I'm sure X crowd is not a fan of me. So no big loss. Anyway, all right. So that's the questions. I'll see you guys on Monday, trading with Sergio, and 10 a.m. Pacific, 1 p.m. Eastern, and have a great weekend. May all your longs skyrocket. May all your shorts tank. Coffee time.